Good afternoon, students. In the last class, we discussed with the functions with regard to the RBI, functions with regard to the RBI, and also we see there are certain things that need to be very, very important with regard to the functions also. That is the standard bank rate policy like that, and the reverse repo and the repo rate like that. So we'll have a brushing up of that session, and then we will go to the next area. So there is what the standard policy. I'll show you the slide with regard to that. See, the bank rate policy that is to be set up, the standard one, and the repo rate, the reverse repo rate, and the variable cash reserve ratio, and also the variation of the statutory liquidity requirements and the open market operation. These are the things we see in the previous classes. Today we are going to see the selective credit control, or what is the qualitative credit control. Till now we see the quantitative credit control like standard policy, then variation in the this one. What is that? Variation of the statutory liquidity requirement. പിന്നെ എന്തായിരുന്നു കണ്ടേ RRR, reverse repo rate and repo rate, and also variable cash reserve ratio and open market operation. So today we are going to see the selective control or qualitative credit control. So what are these? So the quantitative credit control methods are designed to reduce the volume of credit. In order to reduce the volume of the credit, this quantitative level need to be maintained. Now we are going to see the qualitative. So what are the different credit control methods or the qualitative methods that is to be adopted by RBI? So different credit control methods employed by the RBI are: one is control over the bank advances. Bank advance in a control. Section 21 of the Regulation Act, Banking Regulation Act, confers on the Reserve Bank the power to control the advances by the banks. Whatever the advances that is to be given by the bank to the customer, that is to be reduced. Section 35 gives the power to the bank to give directions to the commercial banks also. Following are the methods that of selective credit control generally used by RBI: minimum margin for lending against specific security, ceiling on the amount of the credit for certain purpose, and discriminatory rates of interest on certain type of advances. So that these are the methods. So one is minimum margin for lending against specific security or special securities. Shares. Okay, minimum margin should be there. Minimum margin should be set aside for the lending purpose. Then another one is ceiling on the amount of the credit for certain purpose. There should be a ceiling to be put. Okay. So minimum margin for lending against specific security, ceiling on the amount of the credit for certain purpose, and also some discriminatory rates of interest on certain types of advances. ചില തരത്തിലുള്ള advances കൊടുക്കുന്നതിന് there should be some rate of interest to be charged. So that is the case, control over the bank advances. The Reserve Bank has begun to apply this weapon since 1955. In May 1955, the bank issued a directive to all the commercial banks instructing them to restrict their advances. Advance that is to be restricted against the paddy and rice, and to raise the margin by 10%. In September 1956, this control was extended to food grains, pulses, and cotton textiles. In March 1953, a minimum margin of 50% was fixed in respect of equity shares to counteract the prevailing boom in the stock exchange. So, ഓരോ ഇയർ ബൈ ഇയർ ആണ് ഇവര് ഇത് വാലിഡ് ആക്കിയത്. അതായത് 1955 മെയ്യിൽ issued a directive to all the commercial banks that instruct them to restrict their advances against the paddy and rice. വിളകൾക്കുള്ള advance that is to be restricted. Then to raise the margin by 10%. September 1956 law, the control was extended to the food grains, the pulses, the cotton textiles, etc. March 1953, a margin of 50% was fixed in respect of the equity shares to counteract the prevailing boom in the stock exchange. So that is the control over the advance. Second point is Credit Authorization Scheme. So what is CAS? Credit Authorization Scheme was introduced in November 1965 to regulate the end use of credit. End use of credit. Accordingly, all the banks were required to obtain RBI's permission for sanctioning any fresh credit limit of rupees 1 crore or more to any single party. The minimum limit was raised to 2 crores with effect from November 1975. The limit was revised and increased from time to time. ഓരോ സമയത്തും that is increasing. It aims at what is the aim of this credit authorization scheme? It aims at regularizing the credit by the given by the banks. ബാങ്കുകൾ ഓരോ ബാങ്കുകളും കൊടുക്കുന്ന ക്രെഡിറ്റിന്റെ it should be regularized. That is in a pattern or in a manner. ഓരോ ബാങ്കുകളും ഇത്ര വെച്ച് ക്രെഡിറ്റ് കൊടുക്കുന്നു എന്നുള്ള ഒരു പർട്ടിക്കുലർ സ്റ്റാൻഡേർഡ് റേറ്റ് ഫിക്സ് ചെയ്യണം. അതിനു വേണ്ടിയിട്ടാണ്. ഈവൻ ആഫ്റ്റർ ദ ഓതറൈസേഷൻ the creditor bank can inspect the accounts books of the debtor to ascertain the end use of the fund also. So, authorization കൊടുത്തതിന് ശേഷവും the creditor bank has the authority to check or inspect the account books of the debtor in order to ascertain the end use of the fund. So that is the Credit Authorization Scheme. So that is a little important, that one, Credit Authorization Scheme. It means what? It is introduced in November 1965 to regulate the end use of credit. Creditinde ഉപഭോഗം അല്ലെ ഉപയോഗം കുറയ്ക്കുന്നതിന് വേണ്ടിയിട്ടാണ് this one is utilized. Accordingly, all the banks were required to obtain RBI's permission for sanctioning any fresh credit limit of rupees 1 crore or more to any single party. ഒന്നിൽ കൂടുതൽ ആൾക്കാർക്ക് it should be given the credit, then sanctioning by the RBI is required. Any fresh credit limit of rupees 1 crore. The limit was raised to 2 crores with effect from November 1975. The limit was revised and increased from time to time and aims at regularizing the credit given by the banks also. So that is the case, Credit Authorization Scheme. So the first point with regard to the qualitative control is control over the bank advances. Another one is the Credit Authorization Scheme. Then the third one is the margin requirement. So what is the margin? Changes in the margin requirement are designed to influence the flow of credit against specific commodities. That is, the commercial banks generally advance loans to their customers against some security, collateral securities, or the securities offered by the borrower and acceptable to the banks also. അപ്പൊ ചില കേസിൽ ലോൺസ് പ്രൊവൈഡ് ചെയ്യുന്ന എന്തിന്റെ ബേസിലാണ്? ഹൈപ്പോത്തിക്കേഷൻ അല്ലെങ്കിൽ that is what is there on the base of the collateral security against something by the borrower. So that is the case. So sometimes the commercial banks generally advance the loans to their customers against some security or securities offered by the borrower and acceptable to the banks. More generally, the commercial bank do not lend up to the full amount of the security, but lend an amount less than its value. ആ സെക്യൂരിറ്റി ഇപ്പം 50,000 40,000 അല്ലെ 35,000 എമൗണ്ടിനെ ലോൺ പാസ്സാക്കിയുള്ളൂ. So that is the case. The margin requirement against specified securities are determined by the central bank, and a change in the margin requirement will influence the flow of credit also. അതായത് the margin requirement, ഒരു particular margin is set aside against the collateral securities or the securities offered by the borrower in case of the advances or the loans. So that is the case. A rise in the margin requirement results in a contraction in the borrowing value of the security. And similarly, a fall in the margin requirement results in an expansion in the borrowing value of the security. Securityയുടെ borrowing value കൂടുകയോ കുറയുകയോ ചെയ്യുന്നത് എന്തിന്റെ ബേസിലാണ്? A rise or fall in the margin requirement. So that is the margin requirement. Okay. So ഒരു margin വെച്ചിട്ടുണ്ടായിരിക്കും, ഒരു set aside a margin. So beyond that limit or below the limit, it can't reach us. That is the case. So the commercial bank generally advances the loans to their customers against some security or the securities that are offered by the borrower and acceptable to the banks. So more generally, the commercial bank do not lend up to the full amount of the security, but lend an amount less than its value. The margin requirement against specific securities are determined by the central bank also. So that is the margin requirement. Another term is moral suasion. What is moral suasion? It implies persuasion and request made by the RBI to the commercial banks to follow certain policy. ചില policy follow ചെയ്യുന്നതിന് വേണ്ടിയിട്ട് RBI is given a written request or some persuasion, some what is that? Consent. Okay, for to the commercial bank, taking the consent from the commercial bank by the RB for certain policies to follow certain policies. There is no element of legal compulsion or coercion in this method. Periodically, the letters were issued to the banks requesting them to restrict advance against certain securities. Dis- Discussions are also held with the bankers for the same purpose. In India, from 1949 onwards, the RBI has been successful in using such a method of the moral suasion to bring the commercial bank to fall in line with its policies regarding the credit. ക്രെഡിറ്റിന് വേണ്ടിയിട്ട് കൊമേഴ്ഷ്യൽ ബാങ്ക്സ് ചില പോളിസീസ് അഡോപ്റ്റ് ചെയ്യുന്നു, ചില പോളിസീസ് അഡോപ്റ്റ് ചെയ്യുന്നില്ല. ചില ഈ പോളിസി RBIയുടെ ചില പോളിസീസ് അഡോപ്റ്റ് ചെയ്യുന്നതിന് വേണ്ടിയിട്ട് some moral consent or request to be made by the RB to the center, to the commercial bank. That is called moral suasion. So another term is moral suasion. It implies the persuasion and request made by the Reserve Bank to the commercial bank to follow certain policies. Clear? So that is the case, moral suasion. And next is issue of directives. Under the Banking Regulation Act of 1949, the Reserve Bank of India is empowered to issue the directives to any particular bank or the entire banking system, and the banks are bound to comply with the directives issued to them. Such a directive from the Reserve Bank to the commercial bank can be in regard to the purpose for which the advances may or may not be granted, the purpose for which the advances may or may not be granted, the maximum amount of the advances that can be granted to any individual firm or a company, the margins to be maintained on secured advances, and the rate of interest to be charged on such advances. So that is the case. The purpose for which the advances may or may not be granted. In what way the advance need to be given. What is the purpose behind that? That need to be checked. Then the maximum amount of advances that can be granted to any individual or firm or a company. ഒരു വ്യക്തിക്കോ ഒരു ഫേമിനോ അല്ലെങ്കിൽ ഒരു കമ്പനിക്കോ എന്തുമാത്രം ലോൺ അല്ലെ അഡ്വാൻസ് കൊടുക്കാം, അറ്റ്ലീസ്റ്റ് ദ മാക്സിമം ഹൗ മച്ച്, അതിനെപ്പറ്റി ഒരു തീരുമാനമെടുക്കുന്നു. Then the margins to be maintained on secured loans or secured advances. Security ബേസിലുള്ള അഡ്വാൻസ്, that margin should be kept, and also the rate of interest to be charged on the advances also. That so there should be some interest rates also for such a advances. So that is the case, issue of some directions or directives. So these are the point with regard to the the qualitative control. That is, first point is what? Control over bank advances. Another point, credit authorization scheme. Some authorization should be given to somebody to do so. That's credit authorization scheme. Then the margin requirement, moral suasion, and finally issue of some directives. Then effectives of the credit control measure. So we see the quantitative as well as the qualitative credit control measure. So there should be some effectiveness or the merits with regard to this is what we need to check. So there should exist a well-organized money market. Based on the quantitative as well as the qualitative credit control measures, there organizes a well-established money market system. Second, a large proportion of the money should form part of the organized money market, a particular section of the money. So, a large proportion of the money that should form a part of the organized money market, and also the money and capital market should be extensive in coverage and elasticity in nature. So, and also it should be extensive in coverage, widespread. So that is the three advantages of the effectiveness of the credit control measures. So next, we are going to see the banking ombudsman scheme. So a person should be appointed to check something or check some legal aspect. So that is the banking ombudsman scheme. The concept of ombudsman has gained an importance in many countries as an effective means of the customer grievance redressal program. So whatever the problems that is to be faced by the customer, that is for this banking ombudsman. In India too, the RBI has introduced a similar scheme of ombudsman from June 14th, 1995, and was revised in 2002 to protect the interest of the customers as well as to redress their grievances. അവരുടെ പ്രോബ്ലംസ് സോൾവ് ചെയ്യുന്നതിന് വേണ്ടിയിട്ടും, and also to to protect the interest അവരുടെ താല്പര്യം സംരക്ഷിക്കുന്നതിന് വേണ്ടിയിട്ടും 1995 ജൂൺ 14 ഓംബുഡ്സ്മാനെ RBI ഇത് ചെയ്തു, introduce ചെയ്തു, and also was revised in 2002 to protect the interest of the customers as well as the redress their grievances to solve their problems. Banking Ombudsman Scheme 2006 has come to force from 1st January 2006. Indeed, it is a landmark event in the history of Indian banking. The extent and scope of the 2006 scheme is wider than earlier scheme of 2002. Last 9 years, 60,000 complaints have been dealt by the Ombudsman, Banking Ombudsman. So, 60,000 complaint deal ചെയ്യും. Then, what are the objects of such a scheme? In order to resolve and settle the complaints relating to the provision of the banking services. ബാങ്കിന്റെ സേവനങ്ങളെ ആസ്പദമാക്കി relating to that, what all complaints are coming and to settle and resolve it. For that purpose, this scheme is introduced. To resolve the disputes between a bank and its constituents, as well as between one bank and another bank, through the process of conciliation, mediation, and arbitration. So, through three processes, any disputes between the banks or any dispute between a bank and its constituents, means a customer and a bank, or between banks, any disputes arises, that should be solved conciliationally, mediation, and arbitration. ചർച്ചയോടുകൂടി ഓക്കെ മീഡിയേറ്ററായിട്ട് ആക്ട് ചെയ്തുകൊണ്ട് പലതരത്തിൽ they need to solve the problems, solve the disputes arising, and to make available an expeditious and cost-effective grievance redressal mechanism. Grievance means problems, redressal means remove or solve. So grievance solve a problem, grievance solve a mechanism to bank customers as well as to the bankers themselves. ബാക്കിയുള്ള ബാങ്കുകൾക്കും ബാങ്കിന്റെ കസ്റ്റമേഴ്സിനും to make available an expeditious and cost-effective grievance redressal mechanism. So what is there? Grievance redressal mechanism means problem solving measure. So these are the three things that you need to keep it in mind for why this Ombudsman scheme is to be introduced. So to resolve and settle the complaints relating to the provision of banking services, to resolve the disputes between a bank and its constituents, as well as between banks through the process of conciliation, mediation, and arbitration, and to make available an expeditious and cost-effective grievance redressal mechanism to bank customers as well as to the bankers itself. So these are the three things. Keep it in mind for the Ombudsman scheme. Then how this person is to be appointed. RBI may appoint one or more persons as banking ombudsman to carry out the functions entrusted to him under such a scheme. The banking ombudsman must be a person of high standing in the legal, banking, financial services, and public administration. Generally, he will be appointed for a period of 3 years and he will be eligible for the extension of a further period of 2 years subject to an overall age limit of 65. 65 വയസ്സിന് താഴെയുള്ള ആരെ വേണേലും ഓംബുഡ്സ്മാൻ ആയിട്ട് ഇതാക്കാം. 3 വർഷത്തെ സർവീസാണ് ആദ്യം, അതിനുശേഷം അത് എക്സ്റ്റെൻഡ് ചെയ്യണോ വേണ്ടയോ എന്ന് അവർ തീരുമാനിക്കും. സോ ദാറ്റ് ഈസ് ദ കേസ് RBI Ombudsman. Then powers and duties of banking ombudsman that can we see in the next classes. So today we see the qualitative credit control measures, like that is one is what control over the bank advances, credit authorization scheme, but then margin requirement, moral suasion, and issue of some directives. And also we see the banking ombudsman scheme, how he is appointed and what are the objective with regard to the banking ombudsman scheme, its appointment, and the objective and the achievement. And also we see how an appointment is to be done for the ombudsman. So please have a look at today's classes and please clear your doubts as and when it arises, and please see the video after uploading. Thank you.